Good morning, everybody. Welcome to my trading game plan. My name is Gareth Soloway here, Chief Market Strategist at Verified Investing. All right. So as always, folks, we're going to focus on the charts, the technicals, the probabilities. What is the likely next move in the market, in the crypto markets, as well as the precious metals? We'll look at it all. All right. Starting first, number one, remember tomorrow morning at 8:30 a.m., the CPI data will be released. Markets are anticipating a 0.4% headline number on CPI, 3.1 year over year. So 0.4 month over month, 3.1 year over year. Now, the kicker here is this. I will be absolutely floored if the inflation numbers come in higher than expected. My guess is these numbers have been tweaked to make sure that they are in line or a little bit better than expected. Now, will the market believe it and rally? Maybe they will. I wouldn't be shocked at that either if they give the markets a boost. The whole idea here, get inflation numbers to come out a little bit weaker, in other words, lower inflation, so that the Fed has more room potentially next week to be more dovish. All right. Getting into the charts, we'll get right into the action. The S&P 500 today, we're looking at a flat open. If we look at where we closed yesterday, look at this, folks. I mean, virtually exactly at the flat line right there on the S&P 500. So we've kind of been up overnight, down a little bit. We rallied back over the last 10 to 20 minutes, and we're right back to the flat line going into the close. All right. So I just always like to give us a kind of a baseline for where we are in the overall market environment. Now, the most important chart to me is this chart and the SMH, the semiconductor chart, along with Nvidia, which is part of the semiconductors. This chart, again, continues to be below this trend line here. That remains in a warning sign. In other words, it is a warning sign that, again, the markets are vulnerable as long as we stay below this yellow line right here. So essentially anything right now below 67.50, make sure you understand the markets remain in a very precarious position. In other words, I would look at this and say, no, the markets haven't fallen off the cliff, but they are hanging off the cliff, holding on with both hands, trying not to slip. If we start to slip and we take out the low of the wide range red candle, that's where things get very nasty very, very quickly. All right. And just to go over the charts again, remember, this is what we call in technical analysis a wide range red sell candle. All right. As long as price stays inside of the red, then it is overall bearish. You have a bearish bias. Granted, we're still in only the warning sign, meaning this trend line tells us that we haven't confirmed the breakdown, but overall, we're still within the wide range red candle. That remains with a slight bearish bias. All right, if we were to confirm below this low right here, how low would we go? My guess is we would be trekking back towards the highs from January, which were our all-time highs prior to the liberation tariff sell-off that we saw into April. That now becomes a major level of support. So again, you confirm below 65.50, we'll say, you likely are headed back to 6,100, give or take. That would be your technical support level where a big battle would start and likely a bounce in the market would arrive. Taking a look at the QQQ, much the same. You have your upsloping wedge trend line going back to the April lows. Beautiful trend line right there. And again, you can just see right up there. We have this upper one as well, creating a lot of resistance right above. The QQQ this morning is down just a little bit. We're still same sort of chart as the S&P. We haven't confirmed a breakdown, but we remain in a warning zone, and it's still an inside bar. All of these candles are inside of the red negative bar. Therefore, bias remains slightly negative. Now, quickly, I mentioned the SMH chart. This is an extremely important chart for me. Notice again, you have a trend line that goes back to the COVID lows. All right, so we know that's a major pivot point. It tracks all along here. Here's your bear market, right? There's your bear market in 2022. And then we come up, we hit this line, big correction. The idea is, what's the probability of us hitting the line again and getting a big correction? Notice that the markets, if you look at the markets, this move to this high, and we can do a measurement on this, we do this low to that high, and then you map it here, you can see that we've even gone higher. So the extension move here on the SMH, which created a correction in the semis of 39.4%, we are now even more extended to the upside to hit that line. And again, does that make us vulnerable for a bigger correction? And I will say this, we've gotten earnings this morning. We've gotten earnings yesterday after the bell. IBM, which is in the cloud play business, right? IBM is down 7% on earnings. And it's, by the way, it's not that IBM's earnings are horrendous, right? It's that the earnings beat, their numbers were really good, but the stock was basically trading at all-time highs. And so, like I say, in all of these, when we get into earnings season and stocks are at all-time highs, these companies have to report amazing, absolutely amazing numbers, almost unattainable numbers to continue their upside momentum. Otherwise, sellers are going to say, okay, it's all priced in, and it comes back in. And that's really what happened with IBM. They were just off slightly in a couple minor areas, but it's enough to put a crack in the mirror, essentially, of perfection. Okay, it's Nvidia. This was amazing yesterday again. So here we have Nvidia, right? We have this beautiful upsloping wedge pattern, ascending wedge. This trend line goes back to the bull market of 2021 to the high here before that bigger correction there. And we could see we hit it right here. And I warned when we hit it, we were likely going to see a sell-off, and we certainly did. Now, since then, we closed below, and I still remember the day. And you guys, if you guys have been watching me on a daily basis, we've gone over this, and on a day-to-day basis, it's been astounding. So on this day, so Tuesday, we had that sell-off that closed below. If we had closed below the low here, we would have confirmed a breakdown on Nvidia. All right. In the last 3 minutes of the day on this day, they pushed the market up and we didn't confirm. Then we went sideways here, 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 here. Yesterday, same thing. Nvidia was trading even lower. And in the final hour of the day, Nvidia was able to push back up and save itself once again from confirming a breakdown. So listen, Nvidia, it keeps on teetering on this level. The level I'm watching is any close basically below 179.75 confirms the breakdown. That should open the floodgates. And again, folks, as of now, it has not confirmed. So it remains with a caution flag, a warning sign, but it is not a confirmed breakdown. But incredible how many times Nvidia is getting saved, but also what type of pattern formation is it making, right? What's this type of pattern, guys? I think we all know this, right? If you know your basic TA, that's a bear flag, right? Probability favors it resolves itself to the downside eventually. So just something to keep an eye on here. Again, unconfirmed, but certainly has my attention. All right. The 10-year yield this morning, guys, let's take a look at the 10-year. It is bouncing just a little bit. Remember, everyone at this point with the 10-year and the US dollar is waiting for that CPI data tomorrow. Whether you believe it or not, it's kind of irrelevant, even though I mentioned that I don't really trust it. You know, if the market reacts to it, then the market reacts to it. It's always important to remember that price action is all we care about as traders. You know, there's so many, like think about this. There's so many things people get wrapped up in, conspiracy theories, this and that. But it's like, if it doesn't affect price, or if price goes in the opposite way, then it doesn't really matter what you or I believe. Price is truth. Always remember that, at least for the case of traders and investors, price is truth. Very important to remember that. I learned that the hard way many times, trying to force a square through a circular peg hole, essentially, in the markets. All right, Tesla reported earnings. Tesla, again, pretty good numbers. They did miss on earnings, but they blew away revenue numbers. Really, the earnings miss was due to a higher tax bill than expected. So again, it's one of those scenarios where the earnings were actually pretty good, but it just wasn't sustainable. Tesla's not down a ton here. If we go to the daily chart, you can see it's only down a little bit, but again, it is down on the day. Now, remember, we talked about this yesterday. Here's your wide range reversal engulfing candle and your sideways chop. It did favor the downside, albeit it's not dropping that much, but certainly we're seeing that that's the angle that it's going, at least in the pre-market. It's funny how the charts can kind of direct you into earnings. It's always a little tricky because earnings are very much a wild card. Like, I've literally been right on 70% of earnings, directional moves, but the ones that I'm wrong on, they can be massive moves in the other direction. It's one of the reasons I'm very hesitant to play earnings ahead of time. Like, I very rarely will buy a stock like the day of earnings, because even if the chart is 70% odds that I'm going to be right, if I'm wrong, I could be wrong 20%, like a 20% miss, right? I could lose 20%. It's a lot of risk to take on in terms of trading. I know a lot of people like to do it. It's technically gambling, in my opinion, because again, the times you're wrong can be dramatic in terms of losses. Take a look at this chart, guys. IBM, we talked about it. It is down now about 8%. That is a pretty big move for IBM. The earnings, again, were generally solid. They had a little bit of weakness in their cloud area, and that's all it took for the stock to come crashing down here. You can see I've already annotated the chart. Notice we were a beautiful double top up here. So this is the daily chart, and notice how we had a topping tail with a double top. That's two factors, folks. Two factors. So it's not just the double top. Double tops are good. That's good resistance. But when you get a topping tail and a double top on the daily chart, and this happened like 2 to 3 weeks ago, but that was a post. I actually talked about it in this game plan and showed you guys that day we had the topping tail. I said, guys, this is a major reversal signal in IBM, and down we've come. And now on earnings, even lower we're going. Where is it going likely? Check out this trend line here. Beautiful pivot low from 2024. Actually, you know what? It looks like it almost goes through here. We'll keep it to here, but it looks like it almost extends out into that range. But you can see from 2024 June to the low here in April 2025, that was the liberation sell-off lows. Then you had these two lows in September, August and September. And then where would the likely target be? We've got to think it's around $250. That's only $13 away. So that could hit today, folks. That could be in play today. Lam Research, another semiconductor, reported they had very good numbers, just like most of these companies. The stock initially rallied and then it fell back down. And you can see again, you look at this chart of Lam Research. Look, I mean, it's basically rallied massively into earnings. And by the way, this is one of the reasons why I think we're getting to a point where the markets are going to have a correction, right? Because Lam Research was up 97% since April 7th. Now, if you compare that to Robinhood, maybe that's not that big of a move, but for a stock, that's a big move in a matter of 6 months, right? And so what were they going to report? A cure for cancer? Because maybe that's the only thing that could have made this thing go up versus good earnings. Stock is still falling, not falling a lot, mind you, but it's just, again, lofty price to perfection stats. And that's, again, causing some downside. Now, flipping over to Rigetti getting a good bounce with these supercomputer stocks or so supercomputing stocks. Again, this stock had been crushed. Look at this, by the way. Look at this drop. I want to show you something. If we look at the fib on this, look at yesterday, right to the 50% fib retrace, and then look at the low that pierced here was right at this high. This is a very cool level right there. And again, it was down, 39%, I think. So it was at $58. It cratered to $34 in a matter of 2, 4, 6 days down. I mean, incredible drop, right? Today it's bouncing about 15, just under 15%. And this is all the supercomputer stocks are bouncing because a rumor has hit. Maybe there's some truth to it that the Trump administration may be looking to take stakes in these companies. All right. So again, we're seeing more and more involvement by the government in these companies, whether that's good or bad, not for me to decide. I just trade the things. But again, I love how the chart gave us guidance that something might be in the works, like it might bounce. And again, you never know what the news will be like. There's no way crystal ball is not going to tell me that. What I do know is that when you have a Fibonacci 50% retrace, a 40% drop in the stock, basically, and a key pivot point hit, the odds of a bounce are starting to increase. And that, again, just tells you, okay, we don't know why it's going to bounce. Maybe it just bounces because it's oversold, but ultimately it's likely going to bounce. And that's what it did today on Rigetti. And again, Rigetti in the pre-market, if we flip over, you can see it is trading around $40 after closing yesterday around 36. So it's up a little over 10% on the morning session. A few other stocks out there here. Freeport-McMoRan reported earnings this morning. Stock's up about $1. Nothing to write home about here. American Airlines, same thing, closed at $12. It's at $12.68 right now. So it's up a little bit. It's about a 5% move. Same thing. You're not getting me out of bed as a trader for 5% unless it's Apple. Apple 5%, okay, that's a big company. American Airlines, if it's not a 10% move, I'm probably not looking to trade it. It's not a big enough move. Remember, traders and swing traders need volatility. If you don't have volatility, you're just hoping. You're hoping for a move. And again, I don't like hoping. I want probabilities in my favor. All right, a couple other things here. Alcoa reported earnings. The stock initially sold off, then came back. It's fractionally higher. Notice where it's trading isn't even at yesterday's highs. So same sort of thing. And then Honeywell also reported that stock's up slightly, not a big enough move. And T-Mobile is down fractionally on earnings. So let's be fair, right? Tesla and Lam Research. I mean, again, Lam Research, a small move, but at least it's a semiconductor. And then IBM. IBM to me is probably the one that's most in play as a technical trade, because for IBM, an 8% move is a big move. Tesla, it's only down a little bit, like 3% or something like that. Not that big of a move for Tesla. I mean, if Tesla is down 7%, I start to take note as a trader. 3%, non-event. That's almost every day for Tesla, up or down 3%. And same thing again for Lam Research, a couple dollar move, not going to get me out of bed, but IBM does. That gets me excited. All right, let's go into gold here, guys. Take a look at gold. If we look at this, gold again, a little bit of a bounce today. We still have not hit my first target, which is just below 39.50. We're getting a tiny little bounce. Yesterday, we had a good dump and a small correction here, or a small bounce. Today, we're getting a little bit of upside. Now, in general, what am I going to expect? You have a big wide range down move. You're probably going to go like this and then dump out. Then you get a small bounce, then dump out, and we'll have to see how many of the downside targets come into play. All right, target 1, target 2, target 3, and then this would be my max drawdown level. This would be, again, where I would be looking to be a heavy longer-term buyer. These would be short-term plays for me. So, whether I day trade them or just swing trade them for a couple days, I think they're all doable. But again, this one to me is okay, if it gets here, I'm accumulating more long-term holdings. I still hold my long-term holdings as well on gold, as I think, again, what we're seeing in the government. And speaking of which, I've talked to you guys about the differences between 79 and 80 and today. And while the price action right now is the same, in 1980, we topped out in gold, and gold basically took decades to get back to those all-time highs, right? The idea there, again, Volcker was raising interest rates aggressively, 15, 16, 17, 18%. You had U.S. debt to GDP only at 32% versus today 130%. And then U.S. debt was way lower. We just hit 38 trillion. Debt is starting to skyrocket again, folks. The U.S. government debt is going nuts to the upside. So again, I think by early next year, we're at 40 trillion. And at some point, the bond market's going to care about this. I don't know where it is. Probably has a lot to do with the U.S. economy, because if the U.S. economy, this is what's crazy, is that, generally in good economic periods, like over the since COVID, really, since everything's been so good, housing market, et cetera, that's when you pay down the government debt, right? You're getting a lot of revenue from taxes, so you pay down the debt instead of spending it all. But instead, our government has spent it all. And now when we get in a hard period where we have a recession, where the government usually spends more money to stimulate the economy, my fear is they're not going to be able to. And again, then the question is, well, where do we stimulate? Or do we just end up in a situation like Japan, where the economy is suffering for years and years and years and years, or decades? Again, it's just, these things we have to think about as investors, as citizens. We have to go over them and just be aware of them. All right, let's look at silver real quick here, guys. Let's see what we have on silver. Silver is getting a small bounce just like gold. I would expect in general the same sort of price action on silver, meaning a little bit like this, and then eventually another rollover on silver. The only thing that would change my mind, and this goes for gold as well, is if silver can break above this parallel and confirm, okay, then it's game on to the upside. But right now you have a tradable top pivot, which is aligned with a beautiful parallel with major highs and lows on silver. That to me is a top until proven otherwise. And remember, that's a probability-based assessment. It just is what it is. All right, taking a look at oil. Oil getting a bounce after some major levies were put on against Russian oil companies, some basic, restrictions. So big pop. Notice we are above a little bit of near-term resistance. So that's a nice little move, but let's see where oil ends. Where would I short oil? Well, you do have some interesting level right in here, but I'm not gutsy enough to short oil yet. But notice all these lows right through here, and that's where we are. I would say if oil were to really rally up significantly into this level, and again, I can extend this line out, then I'd start to think about a short around 67. Again, you might say, well, why not? This level here is pretty good. And the answer is yes, it's pretty good. But remember, when you're a true trader or investor, you're not just looking at the probabilities of success. Like that level could be a 75% success rate trade. But if you're risking, let's say, a $10 move against you for a $2 gain, if it pulls back to support, does the risk versus reward make sense even at a 70% or 75% success rate? So it's not just as simple as being like, oh, this is a high reward. This is a high percentage win rate. It's about also looking at risk versus reward and then putting the two together and deciding, okay, is the probability of a win high enough? And is also the risk versus reward making enough sense? And if it is, then it's a trade on, right? So again, all about probability, risk, reward assessment. Natural gas real quick, and then we'll get to Bitcoin. Nat gas, again, confirmed. It's starting to retrace. Remember, my goal is to wait for a retrace here and then look for that up move there. If it doesn't do that, so be it. Then I miss a trade. Not that big of a deal to me. There's so many trades. I mean, if you pay attention every single day in this My Trading Game Plan, I mean, how many every day there's multiple trades. And so the discipline of a trader is the one thing I can't teach. We all have to find that within ourselves, right? I can teach you how to read a chart. I can teach you how to dodge a wrench. If you can dodge a wrench, you can dodge a ball, all that kind of stuff, right? But the idea is that discipline and the ability to remain patient is so hard for all of us. We all have to figure it out for ourselves. So again, that's the key. If I miss a trade, there's always another trade coming around the corner. Next up, let's take a look quickly at Bitcoin here. And Bitcoin is getting a small bounce. Bitcoin continues to be in a warning zone below this level here. It has confirmed below as well. So as long as it remains without confirming back above basically 112,000 now, then I would favor further downside, potentially to 95 to 96,000. Beautiful parallel right along there. All right, guys. Let me just see here if there's anything else on the docket this morning. And again, I do have just a couple. I think I have one question that I wanted to answer. One question here is, why is Apple at all-time highs? All right, so that's a great question. And it did pull back yesterday, but that's a good, solid question. Let's look at Apple. So the key here is, for me at least, a lot of the narrative, and remember, stocks move on hype, right? Greed and fear. And so the narrative on Apple right now is that their iPhone 17 sales are just like astronomical. It's the best thing ever. But I think also it's, number one, Apple for some reason is viewed as a defensive name, probably because people will literally give up everything else but their phone, right? I mean, they'll stop paying their rent. They'll stop paying this. They will not stop paying their phone bill. And so it kind of means that in a weird way, almost phones are defensive. All right. So I think that's part of it. The other thing too is if you look at Google, Nvidia, all of these other plays, Microsoft, they've all made these massive runs in 2025. But if we look at Apple on the chart, has Apple really gone up much? No, I mean, this is where it was in December of 2024, and it's literally right there now. And so there's something to be said for momentum of movement. In other words, people are saying, okay, Nvidia's rallied so much. Microsoft, these other names have gone up so much. Now let's go piggyback and try to get this move out of Apple. All right, from a chart basis, I'm still thinking that there's upside to about 280 or so. Beautiful parallel. But if it gets up to 280, I'm pulling the ripcord and I'll look to short Apple. No doubt about it. And if it doesn't get there, what do I say? So be it. Did I miss that trade? And on to the next one. I've missed millions of trades in my career. My career is defined with the trades that I actually get into. That's really the essence of it. And there's always another trade coming around the corner. That's the beauty of the markets, especially when you trade as many things as we do, crypto, stocks, commodities, you name it. There's always another trade. Have a great rest of your day, folks. Thanks so much for tuning in. I appreciate each and every one of you. Thank you for sharing this with friends and family if you think they'll find it useful. I'll see you tomorrow. Take care.